Hello everyone. In this video, we are going to cover the concept leasing decisions. So before jumping into the concept in detail, let's divide this chapter into small pieces so it will help us to consume and retain the concepts little bit easy. So if you see, it is being divided into two parts, theory and sums. In this video, let us have a quick review of all the points given in leasing decision. Also, the detailed theoretical part will be covered in this video. In next video, we will be doing some sums which is being relevant to this leasing decisions. The first part is being divided as types of lease. Under types of lease, we will be seeing the finance lease and operational lease. With addition to these types of leases, we will be looking into other leases such as sale and lease back option and cross border lease and then import lease, and finally we will be looking into what is meant by sales aid lease. So then another part or to this chapter is about break even lease rental, that is famously called as BELR. So from this part mostly the sums are covered. First we are going to start with the types of lease. So in the previous slide we saw that there is more than two types of lease which we commonly know, that is finance lease and operating lease. In this slide we let us complete the finance lease and operating lease by side view so it will be easy for you. Finance lease. So what are the common points for lease? First we know what is meant by lease. So lease is nothing but an agreement. What this agreement talks about? This agreement talks about the right to use an asset. Okay, so is this asset is going to be provided to the another person for free? Is it a charity? No, there is a very important monetary flow here which is in the terms of rent. So this is an agreement to use the asset of the lessor, that is the owner of the asset, by providing a rent to that person. Apart from these three, you also have to know the terms lessor and lessee. Who is lessor? So lessor is the owner of the asset. OR, the word ends with OR, just keep in mind because it might be little bit confusing at times. So lessor ends with OR, so he is the owner of the asset. Lessee is the one who pays the rent on a periodical term to this lessor to use that particular asset. So these are the common points to keep in mind. So what is the difference? So these are the common points. So let us see what are the difference. In finance lease and operating lease, under both these leases there is a lessor and lessee. The first person is the lessor. The second person which I draw below the first person is the lessee. So what happens here is the first person provides his asset to the second person with certain conditions. So what are those conditions? So basically, finance lease is a lease which transfers substantially all the risks and rewards to the lessee. And another point to this is very important. But is this ownership of the asset is getting transferred? No. The ownership of the asset is not getting transferred. Only the risk and reward is transferred to the lessee and the ownership stays with the lessor. He is going to be the owner. When it comes to operating lease, no such transfer happens. No such transfer of risk and rewards. So apart from these, there are a few other points that to be kept in mind. So what are those points? So if you just covered all these points, if there is any questions you want to answer, just keep all these points in mind. Yes, done, you're getting a full mark. Finance lease and operational lease. As I said, the lease term is going to be very high for finance lease. It is not for a month or two. It will be a long period, a year and so for finance lease. Whereas when it comes to operating lease, the lease term is going to be very less, like a month or two. So another important point to be seen in finance lease is that the present value of minimum lease rent covers substantially the initial future value of leased asset. So we will be seeing this point in detail when we were covering the sums. Purpose of this point is that when the finance lease, since the period of usage of the asset is more, the lessor, the owner of the asset, will try to get maximum of the value from the lease rent itself. So this will make the lessor to be in a more safe place. Okay. So what are the examples of finance lease? Finance lease examples are like ship, aircraft, your plant and machineries. Finance lease is also called as full payment lease. Very important point. Sometimes what happens is you would have know what is meant by finance lease, but if you just miss this point, it is also known as full payment lease. Even if they would have asked the question of finance lease in the name of full payment lease, you might miss the opportunity to derive the value by marks. So apart from this, I would like to cover a few more points in finance lease. The one point is that the ownership of the leased asset will be given to the lessee itself at the end of the lease term. Another point is, as I said, the lease term is for a major useful life of the asset. So these are the sum of the points to determine whether it going and sitting under finance lease or operating lease. So another point to be noted down here is the asset given on lease to lessee is of specialized nature and can only be used by the lessee without major modifications. So this is another important point. So always keep all these points in your mind. So if any of those things fall under this category, then you can see it is a finance lease. So what are the points to be covered under operating lease? Just opposite. Lease term is high for finance lease, then lease term is less for operating lease. Maintenance, repair, and technical services are provided by lessor, not by lessee. It is not taken care by lessee. This is the point where we should relate it to the all risks and rewards or not getting transferred in operating lease. That means whatever repair happens, whatever the maintenance happens, whatever the risks happen, whatever the return happened during this period of time, it all goes to lessor, not to the lessee. As finance lease has a name, another name called as full payment lease, operating lease is called as service lease. Another thing is, lessor does not rely on single lease for recovery of his investment. As leases are for shorter duration, the recovery of the initial cost does not happen in single lease. In this slide, let us see some of the advantages and limitations of lessor and lessee when it comes to lease agreements. Lessor, he is having a full security because the ownership is going to lie with this person. For lessee, it is a source of financing. The next advantage is tax benefit. This is very, very important. So these points covered in detail while we are doing our sums. Next one is high profit. Lessor book an high profit. Whereas here, when it comes to lessee, there is no dilution of ownership. So there is less risk. And what about the limitations? So this limitation, the most of the limitations, if you see, it is being faced by lessee. So one of the limitation is the restriction to use the asset. So there will be certain condition which just comes with the agreement that this particular asset to be used in this manner, then this lessee cannot use those assets as he wish. So there is a limitation to use the asset. There is a high payout. So since in finance lease, the fair value of the asset is being recovered in the initial payment itself. So what happens is there will be a high payout for lessee, whereas there will be high profit for lessor. And finally, there is no ownership. So these are some of the limitations. So these limitations is mostly in the point of view of lessee. So now we are done with finance lease and operating lease. Let us just a quick review of what are the important points here. One point is when rewards is transferred in finance lease, but ownership title doesn't transfer. It's going to lie with the lessor alone. Whereas when it comes to operating lease, risks and reward not getting transferred. Another important point to be kept in mind is finance lease is also called as full payment lease and operating lease is also called as service lease. Let us move to the next type of lease called sale and lease back. It is very simple. What happens is sale and lease back. The name itself is a self-explanatory. Person will sell the asset and then take the asset for a lease. Simple, right? Yes. So let us cover this by an example. The example says, S Technologies Limited sells 40 computers to M Leasing Limited at rupees 30 lakh and immediately takes back on lease for a lease rental of rupees 12 lakh per annum for 3 years. After 3 years, S Limited is entitled to retain the computers. Let us see how it works. So actually under this arrangement, what happens is through a sale deed, ownership is transferred to lessor. Who is the lessor here? The lessor is the M Leasing Limited, right? Yes, because S Limited is the person who is selling the computer to M Leasing Limited. So by paying rupees 30 lakh, now M Limited owns these computers. So obviously the owner is the M Limited. Very, very important thing, possession. But the possession of the computer is going to remain with the lessee. That is S Technologies Limited in this example. And the lessee continues to use the asset for 3 years. So what happens here is as the cost of asset is recovered through lease rental plus as the lessor gets a return under cost of asset. The nature of the lease is finance lease. So also we can just dig little bit deep and see whether it is a finance lease or operating lease. If you see here, what happens is the cost of the asset is recovered through lease rental, right? Because 3 years into 12 lakh 36 lakh. Yes, it has been recovered. 30 lakh already recovered cost of the asset plus extra amount. It is nothing but the return on the cost of the asset. So what is this? So this is nothing but a finance lease. The entire value is being recovered. So this is a finance lease. So this is how you have to interpret it. So other important features of the sale and lease back is that the lessee is going to get a lump sum amount as a sale consideration. First point. Second point is lessee continues to use the asset. In terms of lease, make it an operating or finance lease, the buyer come lessor is entitled to get the benefit of the depreciation. Depends upon the lease. Last point is there is no transfer of asset. The next type of lease is nothing but cross-border lease. Okay. Lessor, lessee. Let us take this line as a border. So the lessor and lessee is situating in different countries. So if this is the case, then it is said as cross-border lease. So cross-border leasing is a type of lease agreement where lessor and lessee are situated in different countries. The equipments involved in such agreement include transport and telecommunication equipments, etc., which requires huge amount of investment. So if you see, there will be a huge amount of investment, and there is a tax advantage. So this tax advantage is popularly known as double dip lease. So you must also know what is meant by double dip lease. Let's see what is this meant by. So double dip lease. Explain few points about double dip lease and then let us see the example, then it will be more easy for you. So it is usually a tax avoidance arrangement that allows either party in a lease agreement to consider the legal owner of leased equipment. So how it is going to be a tax avoidance arrangement? Because depend upon the lease, the tax benefits can be availed by the lessor or lessee. They will get some benefits on depreciation, and because of that there will be a tax savings. So to put it in a simple point, this cross-border leasing has been widely used to arbitrage the difference in tax laws of different countries. So in United States, the criteria is that the lessor possesses substantially all attributes of economic ownership of the leased asset. So all attributes is to be possessed by the lessor. Then only he is considered to be the owner. So this is a very important point when it comes to US. Whereas when it comes to European Union, the main emphasis is on location. So they say is the formalistic property law concept focus primarily on the location of the legal title. So in these cases with sufficiently long lease, often it might be 99 years, an asset can end up with two effective owners. So if you see, if because of these two different laws, what happens is there will be two owner for the particular asset. So two effective owners will be there, one each in different countries. So this is often referred to as double dip lease. You're getting it, right? Yes. So one is there is a long lease, usually 99 years. Another point is that there will be a two effective owners. So the next type of lease is nothing but import lease. Very, very simple. Both lessor and lessee is going to be in the same country, within the same circle. Just take it as a reference. But the equipment is going to be in a different country. So what happens is the lessor is going to import the asset and leases it to the lessee. This is the concept for import lease. Let me repeat again. Both lessor and lessee is in same country, but equipment is in different country. So lessor imports the asset and leases it to the lessee. The next point is about sales aid lease. What is sales aid lease? Here, lessor enters into an agreement with the seller. Usually, the seller is a manufacturer of the equipment. So, he wants to market that equipment. So, to market the product of the manufacturer by leasing operations. So, best example is a coffee vending machine. So, if there is a manufacturer of this particular product, like this coffee bags or tea bags, and there is another person who just sells the machine. So what happens is this person who sells this coffee machine will just give this coffee machine to this person for lease. So somehow what happens is it will boost the sales of both these parties. So this is known as sales aid lease. So at this point we are completing the different types of lease. What are the different types of lease it's been covered so far is one is finance lease, another one is operating lease, next sales and lease back and cross border lease, import lease, sales aid lease. So under cross border lease we have also seen a very important concept called double dip lease. So now we are going into very important concept of leasing decision. It is called as break even lease rental, famously called as BELR. So here what happens is your net present value is going to be zero. So let us just recall what is the net present value. Net present value is nothing but the present value of cash inflow minus present value of cash outflow. So when it equated to zero, then under leasing decision, then it is considered to be break even lease rental. So the rental at which lessee remains indifferent to the choice between leasing and buying is called as break even lease rental. So if you see, both are the same. So this lessee is in indifferent position, either this or that, both is going to land him in the same place. That is your break even lease rent. So rent at which lessee is indifferent to leasing and buying. This is one important point. So the second point is lease rent for lessee is maximum amount. So this is the amount that the lessee is willing to pay. When it comes to lessor, this break-even lease rental amount is the minimum amount he is willing to give the asset for. Below that, it is going to be a loss. So the minimum amount lessor will accept. This is the very basic idea of break-even lease rental conceptually. We will be looking some of the sums. We will grasp what is in it. So guys, by this I'm just completing the first session of our leasing decision. In next session, next couple of sessions, leasing decision concept will be entirely covered and completed. So please stay tuned, and if you like the video, please press the thumb sign and also subscribe for more videos like this. Thank you.